Good morning. Mark Soderberg with ADM Investor Services with your morning ag market outlook for Tuesday, March 18th. Rather quiet mixed trade here overnight. Corn right now is a downside leader, trading 1 to 4 lower. Wheat is up another 2 to 3 cents. Mixed in the soybean complex with bean futures up 1 to 2 cents. Meal is down about $1, while bean oil has tacked on another 40 to 45 points. Crude oil is up $1 and at a 2-week high as increased tensions in the Middle East has fueled the recent price surge. This weekend's U.S. attack on Houthi rebels, and now overnight Israel's assault on Hamas targets in Gaza has fueled this strength. The Israeli attack on Hamas came after their failure to release remaining hostages while also not accepting the proposal from U.S. and on the current ceasefire agreement. Also later today, President Trump is expected to speak with Russian President Putin to discuss ending the war in Ukraine. Weakness in corn is likely being triggered by speculative traders continuing to shed length in the corn market. After selling another 6,000 contracts yesterday, we've got that long position down to about 127,000 contracts, which would be the lowest in 3.5 months. Demand remains good. Export inspections are running 33% over a year ago versus USDA forecast of up only 7%. Corn plantings in Texas did advance 8% last week to 32% in line with historical averages. Harvest of the first crop in Brazil is also moving along rather quickly at 72%. That was up from 54% the previous week. Corn demand for ethanol in Brazil is expected to continue to rise as they move their amount of ethanol they blend with motorized fuel up to 30% from 27.5%. This is expected to increase ethanol consumption by 1.3 billion liters annually. So I do look for spot corn prices to hold above that 450 level. And the beans, Nova Crush yesterday had just under 178 million bushels in February. That was down 11% from January and down 4.5% from February of a year ago, well below expectations. This would imply overall crush at around 188, 189 million bushels for the month. That would put crush over the first 6 months of the marketing year up 5.3% from a year ago, and that's in line with the current USDA forecast. So despite the lower than expected crush, oil stocks came in above expectations, suggesting a huge slowdown in domestic usage for biofuel production. Continue to look for a shift away from biofuels and into the exports. U.S. bean export inspections continue to see their seasonal slowdown, however, do remain 9% above year ago versus USDA forecast of up 8%. May corn did dip below its low from last week. However, the deferred contracts did not. In addition, the USDA, the market is bracing for about a 3 to 4 million higher acreage figure here at the end of the month. Inside trade for beans overnight. Brazilian basis levels continue to improve with the seasonal jump in demand from China, which is even more pronounced this year with U.S.-Chinese tensions escalating. Products, we're seeing a little bit of a shift away from meal and into bean oil as product value there rebounds after hitting recently bottoming out at about 40% on the bean oil. Wheat just continues to be the upside leader here as markets build weather premium with an arid outlook here for the U.S. Southern Plains. Not much change in crop ratings for the few states that have reported them this week. However, I look for a surge in drought readings in winter wheat areas here over the next couple weeks. Inside trade for Chicago wheat overnight as it consolidates both near its 50 and 100-day moving averages at 571. Fresh 3-week high for Kansas City futures. Not much resistance there on the chart until we approach the February high, that very close to 650. Thanks for listening, everyone. I hope you have a great day.